Welcome everybody, this is the Speculator here at Take Your Profits, and I'm going to take some time doing a little bit of post-trade operations here with the trade number 95 post-trade review. Trade number 95 was a long entry in the British pound US dollar market. Let's go on over to the chart, take a look at that. And actually, the previous post-trade review for trade number 95, I thought it was with the other account that I took this trade, but it actually turned out to be that I took the trade on this account. And what it was a another Gartley, 222 signal that turns out, and the market gave me another opportunity to take the long entry here. So, taking a look at the market conditions on the chart, because the first question that I want to answer in the post-trade review is whether or not everything went as planned. Looking at the set strategy, which is the anagram for stops, entries, and targets, my entry was here at 1.5555. Protective stops were just below the previous level of structure, which I was trading the retest off of here at point X, which was at 55.14, and my initial profit targets were at the 382 retracement of the downward ABCD harmonic trend at 55.95. This was probably about a one-to-one. This trade probably held a one-to-one risk to reward profile. But looking at the trade off the bat, what I can see that I have identified is an XA leg here, which the impulse move of this leg broke previous structure here, and on creating that new level of structure at that new structure high, the market retraced with an AB leg, which retraced to a 50% retracement of this XA leg. That 50% retracement then retraced to a 618 of this AB leg, to then extend out to the 886 retracement of this underlying upward trend from X to A here. In this particular trade, however, this was a low scoring trade. Once we get into the Pro Trader dashboard, we'll look at the technical scoring on it. But this particular trade, I remember when I took the AB extension off this AB leg here to measure the ratios in comparison to this 886 retracement, and in comparison to this higher time frame 382 retracement here, I couldn't really find a Fibonacci extension that confirmed this ratio here, these two ratios here. However, the fact that I had this higher time frame confirmation here at this 382 of the higher time frame trend in the upward direction, I knew this was going to be a good trading opportunity. So when I sat back and looked at this market, what I realized, and I have outlined here in these yellow trend lines, is a 1, 2, 3, 4, 5 wave pattern with a ABC 3-wave retracement Elliot wave pattern that formed here. This right here is a 5-wave and a 3-wave retracement, corrective retracement Elliot wave formation. Now, I'm not an expert at Elliot wave, and I don't make my trading decisions based off of it, but this has happened to me before, taking these Gartley 222s, as I've been able to identify these 5-wave correct, and these Elliot wave patterns, and they always coincide with my most successful Gartley 222 patterns. So being that I saw that pattern, I was able to identify that, and being that I did have a Gartley 222 with an AB leg that retraced to 50% of the XA leg, and where the entire ABCD harmonic move retraced to the 886 of XA, and coupled with the fact that I was able to identify a stochastic crossover here near an extreme level of seller sentiment, indicating a nice crossover to buyer control in this market, along with a crossover here in momentum on the MACD chart. I felt confident in taking this trade to at least the 382 retracement of this underlying downtrend here, which formed this ABCD harmonic downward move. I took the entry here, yeah, and then on top of that, when I took the entry, I was only looking at these last three red candles, which I was getting, you know, they were just there testing the 200 period moving average. On top of that, we had the 200 period moving average here, and you know, the market was just testing once, twice, three, four times, and I just knew this thing was, it wasn't going to be a perfect Gartley 222 formation, but considering the fact that it was trading at this level of structure here, which coincided with, you know, a 382 retracement of a higher time frame, and then on top of that we had a five wave Elliot wave cycle here. You know, the probabilities look good considering the amount of risk I was going to put to risk. I was only going to risk from 55 minus 55, 14. I was risking 41 pips. Come on, I've risked 200 pips before. You know, this was going to be a good trade. So I decided to accept responsibility for the 41 pips at risk. I came up with my set strategy, set my stops, entries, and targets. And then, you know what, let's go over to the Pro Trader dashboard to see what the actual technical details of the trade were. Oops. You know, I measured the trade based off of the technical details, and I did everything according to, you know, my trading plan and my business plan. You know, and this thing turned out to be a good winner. So, on continued persistence in trading that British pound market. Yeah, so you see this trade took place, I executed it on October 11th, about 5 days ago, last week, I think on Tuesday. Yep, Tuesday. I entered at 10:39 p.m. So that was during the Asian session, and I achieved all three targets the following day. So this trade took only a day to complete. It was a win. The outcome was a win. It did hold a 2 ATR stop loss based on the average true range of the market. Based on the money management rules that are mathematically defined by the spreadsheet, I was only able to hold half a position based on the technical score and the risk management parameters that I have defined for myself. My entry was at the 55 level as shown, which was where the market was retesting support, couldn't break through. I had my first targets at 55.95, secondary targets at 56.40, and I trailed my third stops until 57.49 for total pip gains of 40, 85, and 193 pips on each one of those contracts, which actually increased my total pip gains on the year for, I don't know, I think I'm still hovering around 7,000 pips. My risk profile in the trade, like I said, was 1-to-1 risk profile. My money management rules, which are mathematically defined by the spreadsheet, suggested that, actually dictated that I could only trade half a position based on the technical scores and the risk parameters that I have defined using the spreadsheet. This trade, at the time I took the trade, only scored points for, and I didn't even give it points for a Gartley. I was real strict with this one. It scored points for trading out of a level of minor structure. Yeah, because it scored points for higher time frame confirmation, and it scored points for completing an ABCD harmonic pattern with 618 retracement, which you can see the probabilities of each one of these three technical scores and how much money it's actually earned me throughout the year. You know, trades on higher time frame confirmation have earned me a total net profit of $7,000 on the year. winning 43% of the time. And taking trades at minor structure has earned me a total net profit of $1,330. Same thing goes with trading harmonic ABCD patterns. I've earned about $3,600 on the year on those. I also scored points for the aggressive C on the Bollinger Bands, which trading trade decisions based solely on those Bollinger Bands has only won 31% of the time and has earned me a net profit of, or net loss in this case, of $800. This overall trading strategy is a net winner, small net winner of only $173 with a 42% weighted win percentage, and it's typically almost a little bit better than a 1-to-1 win to loss ratio. So every one I win, for every one I lose, I'll win a little bit more than 1 times. So that's the Pro Trader dashboard, and that's the win probabilities for this particular trade. Let's go into the chart again to see what happened exactly. Because this trade, answering the first question for the post-trade review, this trade did turn out as planned. It did turn out to be a full winner on all 3 contracts. And this is what the give me 1 second. There's like, and here's what happened. Took the market entry here. This is on a 30-minute chart. Took the market entry here. You can see where the market tested support here 1, 2, 3, 4 times. On the 5th time it started gaining strength, and it never looked back. Hit first targets, second targets, and once the market hit the 127 extension of the previous X to A trend, you know, taking this extension, you know, that's where I would consider the market to be at an overextended position. So that's where I closed the position to take out profits on the 3rd contract. And then on top of that, stochastics, as you can see, turned over, indicating a shift from buyer sentiment to seller sentiment. So it was just a good time to take my profits there. I don't know what happened after that, but this trade was a complete winner. And I like the fact that it was a complete winner based on my identification of this 5-wave and 3-wave Elliot wave corrective cycle. I don't really base my trade decisions off of that, but I like being able to see that on every Gartley pattern type formation that I do trade. So at the end of the day, this is the you know, actually the first question was whether or not everything went as planned, which it did. Then the second question that I have to answer in the post-trade review is what can I do to improve on my trade decisions. Well, in this case, what actually happened was, you see, the rule, I closed my position here, okay, which what I was trying to achieve was achieving maximum gains on this position. But what I would have done typically is just trail my stops here at this level of structure. However, knowing what happened in the future after closing my position at this maximum level here, the market did retrace beyond this level, this level of structure to form pennant, a flag formation, which after that flag formation, after testing this level of support here, it did blow up to make further gains. However, knowing what my strategy is, which would have forced me to put my stops here just below the structure, would have meant that I would have taken profits here below structure, giving up the gains here in this movement. So improving upon this would have really not have happened, because I would have been stopped out here before the market decided to continue to make further gains. So I would not have been involved in that move regardless. So the fact that I took my position here means that I broke my rules, which is actually a bad thing, which I shouldn't be doing. However, it's one of those times where you break your rules and it turns out, for the better. So improving upon this trade really in order to keep 100% discipline to my strategy would have meant keeping these trailing stops here below this level of structure and giving up on the gains that were present here from this level of structure and beyond that. So it's a hard psychological, I guess, position to be in, knowing that breaking the rules in this case increase the amount of money I have. However, it's just not something that really should be done, because at the end of the day, what could have happened was price could have just retested structure here and continued to make those gains, and I would have been out of the additional 200 or 300 pips that occurred there. So that's, at the end of the day, that's actually worse than taking out the additional 40 pips that are here. So really, I need to improve upon this trade, I need to just keep my stops, my trailing stops on those third contracts at structure to try to take advantage of those gains better. On top of that, continuing to work on my ability to identify these high probability wave patterns in the market is also going to serve to improve my trading. I need to look for these 3 and 5 wave corrective patterns while I'm trading my strategy as much as possible, because there is a correlation between them and the Gartley patterns that I do trade. So if I could find Gartley patterns whose XA legs have a 3-wave corrective cycle like this, or a 3-wave advancement cycle like this, a harmonic cycle within the overall larger time frame harmonic cycle, those trades are going to turn out to be higher probability trades than trades that don't exhibit those technical characteristics as well. So at the end of the day, that's what I could do to improve upon this trade. I could also continue to remain consistent and disciplined and committed to the strategy that I am trading. But for now, this is the Speculator signing out. Thanks for listening. Hope this helps. This is my post-trade review for trade number 95, which did turn out as planned, and it did turn a profit. So thanks for listening. Again, the Speculator signing out. Don't forget, take your profits.